Earlier this week, in addition to problems with Evergrande, shares of Chinese real estate developers listed on Hong Kong stock exchanges also crashed. However, this is not the main problem. The main problem is foreign banks and Chinese banks that have too many loans outstanding to not just Evergrande, but also all of these Chinese real estate developers. And what do all of these Chinese real estate developers have in common? They're all backed by HSBC Bank. And HSBC Bank is not a Chinese state-owned enterprise bank. They are not backed by the Chinese government. In fact, HSBC Bank is hated by many governments, is hated by many central banks, including the US, the Bank of England, and the Chinese government. So shares of HSBC Bank have not crashed yet. If you look at a stock chart of HSBC Bank, the shares were as high as $32 a share in May and June of 2021. However, if you look at the tweets that hedge fund manager Kyle Bass has put out, he's been warning that HSBC Bank is one of the counterparties, is one of the lenders to all of these Chinese real estate developers, besides just Evergrande, that is going to have the most trouble. Now, for those of you who are not familiar, Kyle Bass has followed me on Twitter for over a year now. We do speak occasionally in direct messages. I've had conversations with him over the last year or so about HSBC Bank, and he thinks that HSBC Bank shares in the not too distant future could collapse. We'll see if that actually does happen. At this point, I'm not even sure who would want to bail HSBC Bank out, as they have so many enemies in many governments and central banks. The Chinese government is not going to bail out HSBC Bank. The Chinese government will make sure that all the four largest Chinese state-owned enterprise banks, which have enormous amounts of loans outstanding to Evergrande and other Chinese real estate developers, that they are going to get bailouts. So the largest Chinese banks will have losses. They will have to write off bad debt. However, the People's Bank of China, which is China's central bank, is going to print whatever it takes in terms of bailouts to make sure that the Chinese banks inside China, so your China Construction Bank and the other 3 or 4 large Chinese state-owned enterprise banks, do not collapse. So inside China, the Chinese government and China's central bank can print unlimited amount of currency inside China as long as they manipulate the foreign exchange rate against the dollar and the euro to prevent that monetary inflation from affecting the exchange rate. And they put draconian capital controls in effect, which is why Kyle Bass has been talking about China having a pretty strict closed capital count, or close to a closed capital count, for so long. That's one of the measures in place to try to prevent all that monetary inflation from leaking out and affecting the exchange rate. But a lot of that currency is actually leaked out over the last 10 or 15 years, and it's caused real estate bubbles in many other parts of the globe, like Vancouver, Toronto, Australia, and many parts of the United States. The Chinese banking system has actually been a mess since at least 2015. There's been enormous bank bailouts of many different shapes and sizes that Western media has not covered at all. In a lot of cases, Chinese state-run media has made sure that Western media does not cover any of the banking system problems in China, but the amount of credit that has grown in China since 2007 is the fastest in world history. There is a lot of bad debt in China. A lot of it's been printed over. There's been a lot of bailouts since at least 2015. And also, and this was not covered in the Western media, Kyle Bass has talked about this though, a Chinese banking regulator did an interview. It was either at the end of 2018 or early 2019. This was before Baoshang Bank had to be taken over by the People's Bank of China. This was before Bank of Jinzhou and some of the other small and medium-sized Chinese banks back in early to mid 2019 were having problems and got bailed out or were either swallowed up by larger Chinese state-owned banks, state-owned enterprise banks, or by the People's Bank of China, or even by Chinese sovereign wealth funds. This Chinese banking regulator gave a speech in Mandarin talking about how 5,000 or more Chinese banks would probably fail in the next couple years because of how bad the loans were on real estate, how bad the loans were on local government financing vehicles, which are an enormous scam, many trillions, and how bad the loans were in China's shadow banking system, which has grown enormously. So Evergrande is basically the earthquake, and now we're going to experience the counterparty risk tsunami with the banking system. But the majority of the risk here is actually from foreign banks like HSBC Bank, and also from asset management companies like BlackRock and others. And I have a article that I'll attach a link below the video in the information description section, and I'll attach the article about which asset managers officially own a lot of Evergrande's debt. That is just the official number. The real number, depending upon how much debt was bought in China's shadow banking system, it could be a lot larger. So you see a lot of people on Twitter, a lot of professional money managers that are mainstream, quoting the publicly available number for Evergrande's debt. Again, with the amount of accounting fraud in China's financial system and with large companies, the assets, in my opinion, for Evergrande are drastically overstated. The amount of debt and liabilities for Evergrande are drastically understated. And I have not seen anyone publicly mention the amount of debt that Evergrande may have borrowed in China's shadow banking system, because I don't think that data is available in English. So I haven't seen it mentioned anywhere. There is no money manager that I've seen release it for free about the amount of debt that Evergrande borrowed in China's shadow banking system. And we know that Evergrande did play around in China's shadow banking system because they were offering their own employees, they were stealing from their own employees basically, or forcing their own employees to invest in these very risky, fraudulent wealth management products that are now worth zero. And the money's gone. Finally, if you like content like this and want to help keep content like this free so it doesn't all end up behind a paywall, or you want far more in-depth content research, financial education, and analysis than I provide in these short little free videos, there are now over 180 articles, charts, and audio podcasts behind the paywall, all for the cost of a Starbucks cup of coffee per month, only $5 a month. And just in the last 14 or so weeks, there are 29 new articles out on uranium, gold and silver mining companies, a lot of interesting topics about global macro companies and sectors. Again, that's only $5. I think it is one of the best deals out there. I charge less than anyone else in this space for premium content. I think you're going to like it. If you don't like it, you can try it and cancel, but I think you're really going to like it. So if I could wrap up this short little video very quickly, a lot of the problems with Chinese real estate developers are already priced in. It's probably not going to affect China's foreign exchange rate against the dollar and the euro as much as you may think, because of how much control the Chinese government and China's central bank, the People's Bank of China, has control over foreign exchange rate. It is a very important policy for the foreign exchange rate to be manipulated very, very heavily. That is one of the most important policy things that the People's Bank of China does, besides handling all these bailouts with their large banks. In my opinion, from what I've been told, and I just spoke to one of my top China sources early this morning, he said that the 4 largest Chinese state-owned enterprise banks all have enormous loans out to Evergrande and other Chinese real estate developers. And yes, a lot of that debt is going to go bad, but there's not going to be the level of contagion risk and bankruptcies that a lot of Westerners expect inside of China, because the People's Bank of China will just print the currency. So a lot of that bad debt will be papered over. There will be bailouts. Yes, the large banks will have to write off losses. So potentially those shares could drop maybe 10, 20, 30, maybe even a little bit more than that, 30 or 40%. But he said in terms of Lehman Brothers, in terms of Bear Stearns, the odds of that were very, very low. He also said that a lot of this bad news in the Chinese stock market and the Chinese banking system was already priced in. My top source in China already spoke to bankers at all of the top banks. He has friends at all of them. And he said that the Chinese stock market and some of the bank stocks at some point will become bargains. So he's looking to potentially buy in the not too distant future. In his opinion, a lot of the bad news is already being priced in. But the major risk, in my opinion, with all of this are which asset managers in the West, so your BlackRocks, which Western banks like HSBC have too much exposure to Evergrande, and that's going to cause problems, particularly HSBC Bank, because they will not get a bailout from the People's Bank of China or the Chinese government. And because of that, HSBC Bank is going to suffer enormous losses, which is shocking because shares of HSBC Bank are actually rallying as I speak and record this short little video. which doesn't make a whole bunch of sense considering all the things I know about HSBC Bank, the problems, their exposure to China's real estate market. They have loans to all the major real estate developers, and they are not going to be backed by the Chinese government for bailouts. So I could easily see in the next couple months shares of HSBC Bank taking an enormous nosedive.